Welcome to another episode of Banking Bytes, everybody. This is our second episode. You got your host here, Fred Fuller, and I have my compadre, my counterpart in the big brain on the show, Mr. Matt Williamson. Matt, how are you, sir?
Really good, thank you. Glad to be back after the, we call it the Christmas break. I know it's towards the end of January, but it takes its time to get back into the fold and get the brain trust going again.
But it's moving, yeah.
It is, yeah, it's trying to.
He's trying to. Well, look, today we have, as promised, right? We're going to have guests on the show. And today we have a very special guest. So before we jump into your shenanigans over the holiday break, I want to bring our guest into this conversation and see if he's got some shenanigans to share as well. So today's guest, I'm incredibly honored to have Piet Mallekoote. Is that correct, Piet?
Yes, I'm very glad to be on the show today, and thanks again for the invitation to be there.
Yes. Well, we are thrilled to have you. It is absolutely our honor. So I'm going to go over just a couple of your, sort of a little bit of your background, but then I'm going to ask you to do the same. And so then we'll get into sort of the topic of the day. And what we're here to talk about today is customer centricity. And I love this conversation, and specifically with you, Piet, because I think when we talk about customer centricity, we immediately go to UI, UX type conversations. You actually have a kind of a different, broader kind of market frame on what that customer experience looks like and is, I believe. Is that a safe positioning?
Yes. I'm always have always worked on the market side of the payments associations and the schemes. So my focus has been what's the customer's doing and what is his choice in paying with which kind of payment method.
Yeah, and that's an incredible angle. We hear this conversation in various markets around the globe, and it's a very interesting as we move to this sort of cardless or cashless kind of society, if you will. The need to pull back and maintain some portion of that and to still make that available is what we see kind of prevailing in the market. But before we get too far into the topic, I'm going to cover just a little bit of your background, and then I'll ask you, Piet, if you don't mind to elaborate, because when I looked at it, I tried to put it in simple layman's terms, and I found that to be almost an impossibility. Your level of involvement is really incredibly impressive. So you were part of the Dutch Central Bank for over 23 years. Is that correct?
Yeah, that's correct. And then I have the opportunity, because at that time, the latest job in the central bank was head of the payments department. And then I got the opportunity asked by our governor to step into the private sector to create a new organization for the Dutch payment schemes. And that was important because they should have a kind of neutral person as a CEO, not coming from the banks, because that was not very nice for PSPs, which are not a bank or want to enter the bank. So they could think of some of a conspiracy. So I had to be, well, there was to be a neutral person there. So I came on board and I managed the schemes from the debit card, and also Ideal came in our portfolio. Yeah, and after that we went to the SIPA. So the Dutch national payment product disappeared, except Ideal. So the banks decided to set up a new organization, the Dutch Payment Association, not for schemes but for just talking with each other about regulations and to create innovations not based on national skills but on European skills. So we created the instant payment not scheme but instant payments facility for the Dutch banks and the consumers. I introduced before SIPA and PSD2, so a lot of innovations, and also the digital identity. So I was involved in a lot of innovation. Fascinating time, really.
It's funny because when I tell people that I work in banking technology, if you're at a dinner party, there's no better way to clear a room than to start talking about banking technology, right? Like nobody's terribly excited by that topic. But then when you talk a little bit about what happens with banking technology and specifically payments technology, you quickly grab people's attention, right? When you talk about a card swipe at a store and all the information that's being exchanged and everything going on behind the scenes, people suddenly sit up and they go, well, that's interesting. And then when you talk about it in a way that impacts their day-to-day lives, like that's a completely different level of interest, right? Like, tell me more. This is fascinating. So I think it's an interesting topic where, largely a great portion of the population, we think, right, us in the community think that the large portion of the population is kind of blind or doesn't have strong opinions about it. They just want to pay. But that's not necessarily true. Is that correct, Piet?
Yes, that's true. I have learned from the external side how important customer centricity is. And it's not only technology. I had to do with a lot of technology, but probably also important, I don't know if it's more important, but also important was to talk with consumers and retailers, to sit together. And if you have an innovation, if you want to change something, just discuss it with them. And you will get a lot of positive feedback, also negative, but mainly positive feedback. And you can do your advantage with it. Because that is what the customer wants. And that's completely different from the beginning of the 19th, when there was not any communication with retailers or consumers. The banks thought it was a good innovation. They brought it to the market. And then, for instance, that was the case with the electronic purse in the Netherlands. Nobody actually wants to use the electronic purse. Banks thought it was a good idea because it could save cost of cash, but it was too consumer unfriendly. You have to go to a kind of ATM. You have to load your chip, knip. That was it, and it was not consumer. That changed completely after the introduction of the mobile, so to say, because then the mobile became the bank, the most important banking channel, and then also the customer was becoming more and more centric. And these discussions we had with from the payment organization, I had with the consumer organizations and the banks and the retail organization were in the beginning not so helpful for the banks because they got a lot of requests from the customer side. But after 5 or 10 years, this is very cool. This is very cool because now we have the information and we can do our advantage with it. So that has changed dramatically. And what you see now is that if you look at the statistic for payments, that the payment products which has the most smooth customer journey, well, they have a lot of priorities with the consumer. That's what's happening.
Yeah. And Matt, I'm curious from your perspective, you engage with a lot of customers. You've been in this space for a long time. When you hear customer centricity and when you interact with clients and prospects, what meaning does that take on from your perspective and in your day-to-day kind of experience?
So I think
they have, if you talk with the representative of consumers, of retailers, of course they have kind of commercial thought because they want to have always cheap payments. Although they know they have to pay for payments because payments cost money. So, but you can do it as efficient as possible. And if it gives a smooth customer journey, well, then they are very happy. And if you can provide it at low cost, and you can do it at low cost if you cooperate, then you have scale. Then you can make them very happy. So that's also what you see in the Netherlands compared to other European countries. We are quite different from payments compared to Europe, and it has to do also with the customer centricity, I think.
Yeah, it's interesting. Different regions have a different level of focus and emphasis on what it is and how to make sure that the customer's experience stays intact. And so Matt, I'm curious if you in terms of like more broadly, right? In the Netherlands, it's very specific. It's very customer centric. And your experience sort of in other parts of the globe, where do you see sort of the overlap in terms of the mindset that you see in the Netherlands versus maybe a different region, which is more focused on efficiency and sort of cost savings or things along those lines?
So it really depends. When we talk about our customer, it's often a service provider or a technology provider to a retailer, for example, or a corporate. But when we think about the customer's customer, which is you or I, and the day-to-day interactions, it's a different requirement. The consumer doesn't care what happens in the background. Is the reality. They don't care if it goes by carrier pigeon, digital, it's a tap, as long as it happens and it doesn't, impede their day in any way. That's all that matters to them. So the real trick, and Piet referred to it as well, which continues over from the Netherlands, is the providers want efficiencies. In an ideal world, they're being pressurized more and more by regulators to be more competitive, open up the landscape so that the customer has multiple options on how to make their payment journey. Whether it's a card transaction, account to account, via open banking, P2P, whatever it may be, or any other alternative payment methods. So it's more where we're getting involved, and what I'm seeing is how can we create a multi-channel operation? So almost if we call it an orchestration layer, for want of a better phrase, that enables various channels to be plugged into it that can facilitate that journey. So it may well be, it comes in on one rail, goes out on another. The idea is what's the best optimized route for either the consumer or the provider. If we use cross-border as an example, and I won't go on a whole cross-border rant like I normally do, but the reality is cross-border, you can get real-time cross-border payments, and you can also get challenges, frictions, delays, etc. But you're going to get to a point where the consumer will choose the type of cross-border payment they make, as in, I need this instantly to transfer and be billed on the other side. Right, then I don't know, let's say there's a $5 surcharge for that, or it's euro, whatever. Or actually, it just needs to get in the next couple of days, or then it's a cent or two for that transaction. So Piet covered it really well. We often get caught up in the technological advantages of doing these things, but if the customer doesn't want it or it doesn't make their life easier, what's the value? So sometimes we can say we can do all these things real time, instant, but if we're going to charge someone for that and that's not of value in their day, then there's no value to them as an individual. You're saying you're going to bill me to do something I could do before. All right. So, and I think that's always, to Piet's point, is a feedback loop with the customers. This is what we're going to do. We've experimented, we've trialed it. Is it working on the pilot? Yes, no, what works, what doesn't? And as you mentioned rightly, the communication is a lot more transparent in today's world. Let's be honest, we haven't even got to AI yet, but I'm going to throw it in there just for fun. But the value of data that's around at the moment that you can consume and make decisions based on, and you can understand and refine and mine. So there are lots of feedback loops that we leverage and others should do to make sure you are delivering the right value. A KPI can't just be we make money out of it. That's a great one for investing in new business, but is it meeting the customer's needs?
I can add that in my practice, the customers has been the basis for innovations because they requested innovations to the banks. For instance, the ideal system was asked by the home shopping organization because before that time they had to do with three systems of three banks. So they have to negotiate, all the web retailers had to negotiate with three banks. So the organization came up with a question, could you make one system? So that was a call on the banks to come up with one system. So they created Ideal in thought, and then it was brought over to the current organization. Another example is the start of instant payments, because banks are in most cases quite a little bit not badly mentioned, but most little bit lazy. So they can come in action when the customers ask something. So there was a meeting, and the retailers asked the banks, well, now we are coming to the Easter weekend, and that means that the turnover on Thursday will be credited on our accounts on Tuesday after Easter. So that's not realistic in this modern time where we have email. So why cannot a payment be as quick as an email? And then the banks did a lot of research and they said we cannot manage it. It's too difficult. It costs too much money. But then some banks found out that they could help the retailers by pre-crediting their accounts during the weekends. Yeah. And that was, of course, not a very elegant solution, but it worked. And that was actually the reason why bank thought, well, we have to solve this. Why can the payment, and they could not answer, why can the payment not be as quick as an email? So they started instant payments. And then after a couple of years, because we were the first in Europe, it was incredible because you can pay in less than 5 seconds, 3 seconds, 24 days, 24 hours, 365 days in the weekends. Because that was actually the case. If normally you have to make your credit transfer on Friday before 4 o'clock, then it could be processed even for 3 o'clock. But now you can eat, and then it's on your account on Monday. With instant payments, you have to, well, if you do in the weekend the payment, it's in a few seconds on the account. So that's incredible, and people were very amazed and astonished and very happy that it. But now it's just default, so they know not better than that. It's always instant, and that's quite different for other countries in Europe where it's still not. Yeah, it is not now. It's mandatory by the regulation, but it's still not organized everywhere. So
I think from a psychology perspective, Pete, it's really interesting as well what becomes the norm versus what was really difficult. So, like my kids think everything's instant because that's all they know. Yeah, well, consuming media, whatever it is, content is just instant. They have no understanding of I'll go to the ATM, the nearest one, and walk to that, or I'll go and buy something and I can't back up music. I'll buy a CD or a record, but I can't listen to it until I get home. They have no concept of the journeys around that. It's just ubiquitous. And I think that's the point you're saying there is when you position the challenge to say, why can't you do this? The thinking behind is because it's really difficult. It's not that you can't, it's have you got the time, bandwidth, funding, internal backing, or even regulatory backing to do something about it. Anywhere we've seen real success and growth is often been mandated by the regulators. Now, it doesn't mean I'd say it's a happy path because there's always bumps in the road and what have you. But if you're going to make an enormous change socially and socio-economically, someone has to put the line in the sand and say, you're going to do this. You know, we've seen ISO 222 has been banding around for a long time. And I'm an ex-banker, so I'm not going to use the term lazy just because I have some affiliation with my former compadres. But there are lots of challenges internally, but often it's competing budgets, timescales, people, and resourcing even. Is the cutoff the real cutoff, or can we just gang up together and push back on the regulator and they'll give us more time, like 6, 12 months? And if there's been a continuous history of that happening, then the deadline isn't a real deadline. It's a nice to have deadline. We've all been around long enough that it could push out 6 months, 12 months. So we'll focus on other things. So it is there's so many moving components to make these things successful, but generally it has to be mandated by someone with teeth or power, however you want to phrase it, and make everyone else fall in. And unfortunately, it's carrot stick. First movers often get first mover adoption, but banking as a whole is quite traditional and doesn't want to take the risk. And so they'll wait. So yeah, it's, the Dutch model is super interesting. We're seeing, if I look at, let's say the Middle East as an example, they're leapfrogging ahead. They have some legacy incumbent challenges, but they're learning lessons of, Europe, UK's faster payments, real-time services, SEPA, instant credit, etc., and the US as well. And how can they miss the bumps in the road? How can they learn from that and go from one to another? And I think that comes back to what I mentioned earlier. We're seeing this element of a multi-channel payment provider. It may start in a bank or it may start with a fintech, and there will be a relationship between the two. But ultimately, the consumer doesn't care because they just get to fulfill their payment journey.
The direction I could give you, I recognize this. It's if you listen to your customers, then our philosophy in the Netherlands was to be ahead of regulations, because if you get regulations, you are forced to do something, and you are also forced to do it on a special way. If you do it by self-regulatory measures, well, you can do it on your own way, and you you can achieve the same result. So that's actually what we did with instant payments, also with Ideal. Do it yourself. And now there is a regulation coming on. There is already there for instant payment, which is mandated. But it costs always more money if you have to do with regulation than if you do it yourself. But for that you have to be in a cooperative modus with the banks, and they have to see the advantage of doing it for the customers. Otherwise, it will be done for you, and then, in our view, the product management is not in the center of your country, but is in Brussels. It's done in Brussels. So, if you do not want it, just come in action.
Yeah, and it's a cultural mindset, isn't it? I think that's the thing. It's a different mindset of, yes, you're right. We'd rather be ahead of this and dictating our own destiny than have it dictated to us. And we saw the example last week where HSBC's cross-border fintech, Zing, was wound up after just 12 months in operation. And that was built as a competitor to Wise and Revolut and others. And unfortunately, we must be cognizant quite a lot of people have lost their roles, which is very sad. But a major tier one bank has tried to replicate that, but as a tier one bank. And the difference is those organizations, Wise and Revolut and others, don't behave in the same way. Therefore, they're not bound by the same model. I think that's something we've seen time and time again, whereby an incumbent, for want of a better phrase, tries to compete with fintechs, but can't realistically because it's not inherently a fintech.
Yeah, I think, there's challenges creating that network, right? If you have a lot of competitors out there that are looking for the same functionality, but they'd probably rather not run it over a competitor's sort of platform or things of that nature. So I think for a large bank, it's hard to set out to become a fintech that your competitive landscape is going to embrace, right? Like, I think that creates a little bit of a challenge. Let me shift gears just a little bit, if you don't mind. And Piet and Matt, I want to talk a little bit about CBDCs. Piet, I think you've done some work in this area, and I would love to get your take on kind of crypto and the cash-based digital currencies and where you see this playing out, and how does that impact customer centricity?
Well, about that, happy with your question. When I left the Dutch Payment Association, I was asked by the Dutch Central Bank to join a group at the ECB digital euro market advisory group. So I didn't know anything about CDBC, so I said it seems to be a good idea. So I joined this group, and I learned a lot of all the people there, and a lot of stakeholders from all Europe. The group stopped because the ECB entered in a new phase where the market advisory group has done his work. But actually, Europe is far ahead with the digital, with CDBC. We have, of course, China with the digital yuan, which is still in the phase of pilot, they said, but still are a lot of volumes. China is a big country, but we have some small implementations in Bahamas and Jamaica and Nigeria, but for specific reasons. I think Europe is far ahead with the plan, and actually they have three reasons for doing this. The cash is decreasing. Cash is still the main payment method at the point of sale, but it's decreasing. It's from 5 years, from 2019 to 2024. Cash decreased with 20% point to just 52%. So the ECB is very concerned of a further decrease, and they said, well, then we have no public money in the economy. So still there is not, at the moment, is not a danger, but it could become a danger if public money would be phased out or would go to just a minimum. but another point is the strategic autonomy. That has to do with the fact that in Europe the card systems are actually used by Visa and MasterCard. So a lot of, well, they said American companies. I've worked with those companies. They've done a lot of innovation, done a lot of work, but you have to be aware that probably from the side from America, there comes a message, stop payments in Europe with MasterCard and Visa. So the ECB wants to be follow a policy with strategic autonomy. There is no European card scheme, although the ECB has called for that for 20 years. There's no European card scheme. And the card schemes are, that's the other point, are quite fragmented. So there are a lot of national card schemes still, I think 13, but they are not interoperable. And that means that if you have a card from Germany, you cannot pay in Spain. And of course, banks and that works via the international card schemes. That no problem. So actually, the ECB wants to solve the fragmentation, and actually, the digital euro should be a payment method where you can pay everywhere on every channel. So online, P2P, as well as the POS, everywhere, and it's a legal tender. So merchants have to accept the digital euro. That's the idea. And it's not in the sense that it has to be in competitors with private money. You can see it just as digital cash. So digital, that's the idea. And the plans are still in, well, they have now entered a preparation phase. So they are preparing the technical environment and so on. So there's nothing decided yet, but it could come once to a point if there's a legal certainty, if the Parliament, the European Parliament, the Council has approved the legal proposal, then the ECB can launch the digital euro. But the decision is not made yet.
So Matt, I'll start with you. I would love to hear both of your responses to this. It feels to me, Piet, that the CBDCs, the focus is on behalf of the customer, right? It's to remove friction from that experience, from the payment experience, from a global perspective. But I'll start with you, Matt. It would seem that the biggest challenge or hurdle with this is actually educating the consumers. Would that be a fair statement? Or
I think it's as broad as it is deep, as in, if we look at where CBDCs came from, it's originally off the back of blockchain, right? Or the block, you want to call it, and then everything being immutable and outside of the traditional schemes, to Pete's point, and it just happens, it's instantaneous. And there was a lot of, well, find me a use case that works for it. Trade finance is probably the best use case at that moment in time. And it didn't become ubiquitous with anything. And I think that's the same with all payment types. If the consumer doesn't get the value of why they should use it, then adoption isn't going to come past that. I'll give you an example. This is really off topic, but it will make sense. So I'm into cars at the moment, right? And Range Rover have just announced their latest model update, and they've taken away all the buttons in the car. So it's just one screen. And their view is you can do anything you need to do within 2 clicks. It's like, but you could change the temperature with 1 click before. Right? So your selling point isn't you've added friction. Now, I know it's away from the payments thing, but it's to give that comparison of, if you're giving me something that makes life easier and safer and all of those things, great. But if you're telling me all these extra steps you need to do in order to get to this point, well, I'll just use my card or account to account, or pay by link or something along those lines. So the CBDC thing is important, and it's important that they came from central banks. So you've got this certainty around it. I mean, I remember people saying, not too long ago, the distant past, you'll never have central bank distributed digital currencies. It's fiat only, fiat currency for life. And now we're seeing an uptick actually in exchanges for fintechs that can convert crypto or CBDCs into fiat rails, so you can upload them more quickly than a traditional wallet provider. So, a kind of full circle, you've really got to make people understand what the value is to them to use this outside of the current channels. And I think that's always been the case. Unless there is, if you use this, you get the equivalent of cashback. As an example, you incentivize people to choose this channel, then you'll get ubiquity. But I suspect, and Piet, I'm more than happy to be corrected, I suspect for global ubiquitous nature of CBDCs, I think we're about 10 years away. I think you'll get one market that will nail it and others will follow.
Piet, I'd love to hear your take on that.
Yeah. So the point is that if you are in a well advanced market such as the Netherlands or probably Belgium or Finland, the question is what could a digital euro add to the payment options which are already there? And then, of course, CDBC is public money, and the current payment options are private money. But a citizen doesn't say so much on public money and private money. He wants just to pay. He's not thinking on this is a public money, it's a private money. He just want to pay. So, if you cannot pay with your private payment method, probably you can use the public money method. You can use a digital euro. But if you are satisfied with your current payment options, well, there will be large adoption problem. And I think especially in the Netherlands, that will be, I think a huge challenge to see if the public accepts in a mass environment a digital euro. I think a digital euro is good for resilience, and because if there is a problem in the private sector, you can use it, you can have it, but it's a question how it will be adopted. And then an innovative initiative of the digital euro is an offline facility, so you can use your payment method offline without any internet connection, completely private, anonymous. So that's a call for people who say, well, I do not want to use digital payments because the privacy is not safe, especially concern from Germany. But the question is, will an offline payment option get the mass of the digital euro? In the past, we had the electronic purse in the Netherlands, and also in Finland, you have such a tool. It was phased out because there was not any appetite for that. So, of course, now the technology has advanced. The mobile applications are very much improved. So that could be a positive element, but it's still a challenge to see how people will adopt it. And probably in Italy and Germany, there's still a lot of cash, about 70%, now 65% cash in the point of sale. In the Netherlands, it's 20%. So it says something about the digitalization, and probably for those countries, the digital euro can be a solution. We have to see. Yes.
Yeah, and I think on top of that as well, we use digital, we can use CBDCs as well, is the access to financial inclusion or increasing financial inclusion. If you look at the World Health Organization, the World Bank, not World Health Organization, they're saying that over half of the people classified as in poverty are those under 18, under poverty definitions. So if you can add digital financial services, a large proportion now have got access to smart devices in all areas, varying levels of economic stability, which enables you to push things to them and enable a digital currency. That means they can pay for services, buy services, so to get access to healthcare and so on and so forth. So I think coming back full circle to how can you generate adoption, it's looking at specific use cases for each market, whether it's well adapted, well adopted, more advanced or less, and finding the right point that can really generate volume and value on top of that.
Yeah, that's also the idea of the digital euro. It can improve inclusion. But if you look at the setup of the digital euro, you have to have in any case an account at the commercial bank, because that's quite similar. If you want to have cash, you go to an ATM. If you want a digital euro, you go to a kind of digital ATM. But your digital ATM is your private account at your bank. So you load your digital euro account with money from the commercial bank, which is actually the digital ATM. So you need it, and you can use an offline wallet, and then you actually, in theory, you do not need to load that from your current account. You can load it for your ATM, but then you have to go to the ATM. You put banknotes in the ATM, and then you can load your CBC wallet, your digital euro wallet with banknotes, which is not very well. It could be an option, but it's not very consumer friendly. I think if you compare to the digital world, where everything is smooth and seamless. So,
Yeah.
but it could be a solution.
It'll be fascinating to watch. Again, I come back to kind of the top of the conversation in that, as we talk through these things, the evolution and where we are is just, to me, it's absolutely fascinating, and we could talk about it forever. But we all have jobs that we have to get back to. So with that, I'm gonna throw one last question at both of you, and I think, Matt, I'll start with you again, because I would love to give Piet kind of the final word here. But where do you see AI playing in this space, if at all? Does it have applicability, and can or will it move things forward in a sort of a step change or exponential fashion? Matt, your view.
So I have quite broad views on the whole AI piece, and it's such a broad topic. I know it's bundled into AI as a whole, so I'll try and be as specific as I can. So does AI have a position in this? Yes, of course, there's a position in everything, but merely as an augmentation tool to measure, usage, utilization, finding, case points. To Piet's point earlier, if your customers aren't using it, why aren't they using it? Is there a point they're dropping off at, as an example? Whatever it is, to really help build out use cases and, number crunch, basically, large amounts of detail in a short space of time to give you that feedback loop. There's obviously stuff we just haven't figured out yet, as with all new technologies that get embraced, where they'll take us fully. But yeah, it definitely has a place, but again, as an augmentation tool, not as the definitive answer.
Thanks, Matt. Piet?
Yeah, I think AI will be a fascinating development, especially, I think, for data, making the data available for the customer, and offer a personalized convenience for the customer. I think that will be a great tool for setting the customer more centric than now. And it already on a high level, but we can see what will happen in the future with that. I think now the expectations are high.
Yeah. I'll close it out with, I think AI will play a role. I think where AI can play a massive role is actually in the adoption, in the market's adoption of the new tools and the new payment methods. So I think one of the barriers to entry for a lot of the sort of innovation is getting it onboarded into the financial institutions. That's a pretty big challenge. And I think if we can leverage AI in a way that simplifies that and takes an implementation from 9 months down to 4 months, well, then all of a sudden now I think you have removed or greatly reduced one of the barriers. But that's just my 2 cents. So, Piet, as said, I would give you the last and final word here. Do you want to close us out with a few final thoughts? What's your passion in payments, and what's the thing that we should all keep our eye on?
Well, payments is very fascinating because it has so many aspects, and I'm very interested to see how AI develops, how digital identity will evolve, but also stable coins and tokenization. It's a fascinating world. I think we are just now not at the beginning, but because you have already done a lot, but it will it will have a lot of developments in future and innovations. And I think cooperation is the key for that, because if there is no cooperation, the customer will not be in a position to do with the new tools things he wants to do. So that's
awesome. All right. So that closes us out. Piet says collaboration and cooperation is key to the future and getting us where do we need to be with our payments landscapes, both locally and globally. So for Piet Mallekoote, Matt Williamson, this is Fred Fuller. Thanks for tuning in to Banking Bytes. We'll see you next time.
Thank you.
Thank you.